All right, everyone, here we are with ticker symbol SNDL, Sundial Growers Inc. And before we jump into this chart, I want to say welcome to all the first-time viewers and investors. Welcome to the channel. Invest for tomorrow to all the subscribers. Welcome back. And as we jump into this chart, I just want to quickly announce to every single investor to stay tuned till the end of this video because I have a new ticker symbol you won't want to miss, and you definitely want to add to your watch list and keep on your radar. We talked about Intel Corp yesterday. We're going to talk about another company in the same sector or similar sector, and it had fallen due to earnings report, and it's already picking back up. So you definitely want to keep this one on your watch list. So stay tuned till the end so we can look at the chart and the company outlook and everything overall for that ticker symbol. So SNDL, Sundial Growers Inc., has actually gotten a lot closer to the support that we talked about from yesterday. It looked like a very broad stretch, and it's actually sitting a little bit below it right now, the lowest point that it touched, and it's actually sitting slightly on it. I had stated yesterday that we were going to talk about support levels as we got closer to them, more zoomed in and focus in. So now I actually have to come over here and zoom in so you guys can see what important support levels we need to keep in mind moving forward. The first one and nearest one is right here at $49.99, 50 cents to be exact, 5 cents away from where we're at. 50 cents is very important moving forward. And then the next one would be right down here at this lowest point before the run up there at 42.14. If you want to round that down to 42 cents, you can, but that is the lowest point reached in the bearish run before this had a bullish run leading into the catalyst towards the end of January. Right now, SNDL doesn't have many more catalysts to come for it other than news, speculation, or hope, because it's already kind of stated everything about it, that they're debt free now, that, the legislation everyone was waiting for was going in the process of it passing the House and everything around the Senate. And then also the anticipation of a switch, right, in administrations, and one administration favors this sector than the other. So there was hopes and speculation in that. And you can see during, right, election day, the runs that we had during, obviously, towards the end of November leading into December, due to the fact this was one of the biggest catalysts, due to the fact that the Trump administration was allowing a transition finally, or acknowledged a transition, and that gave this a big lift, almost reached $1 and fell right back down. And then the next catalyst was January 6th and leading into the end of January's month, which was Inauguration Day. Since then, we have been seeing this fall. So, if you're a bull and you're long on SNDL, you're not too worried about what's going on right now. You see this as an opportunity. But I really want to speak to every single investor, the bulls and the bears. What other catalysts could happen right now for this to run back up? Because it's going to be really hard for SNDL to get pushed upwards without any news, speculation, or hope of a catalyst strong enough to attract investors back into SNDL. Because a lot of investors are actually leaving right now. That's what this is showing us. A lot of profit taking and uncertainty has kicked in. So, back to those points again. I want you guys to have them written down. The first one's right here at 50 cents, right? And then the next one's down here at the lowest point at 42 cents. I'd round that down and I'd round this one up. Those are the two main points moving forward if today's support level gets broken through and for the next coming days and weeks. Super important to keep in mind. We're currently sitting at 55.16. The support level is 55.02. It's not that far from each other. Basically, 55 cents gets broken through, we will start to see newer lows, new support levels, and getting deeper into bearish territory, getting further away from the 50-day moving average, which is 60.40 to be exact, but just to round it down or up, however you want to do it, 60 cents or 60.50 is just fine. They're all around the same area. Now, it is a difference to the hundredths place by one number, but it's just fine. 60 cents to kind of have a rough idea, and to be closer, 60.50. But that is the 50-day moving average, and we need to keep that in mind. As long as we're below it, we're in bearish territory. The moment we're above it, we're in bullish territory. Now, on these candlesticks on the way down, there were some spikes here, but there is a high point here in the bullish candlesticks on the way up before this started to drop. And this is more important to me than those candlesticks on the way down. This is the resistance level that the bulls definitely need a breakthrough, and to be exact is 61.53. They need a breakthrough the 50-day moving average, and they need a breakthrough 61.53, turn it into a support and break away from it to reach newer highs, new resistance levels, and get deeper into bullish territory. Very important for the bulls to do so. 61.53 needs to be broken through, turned into a support, so the bulls can work their way up to newer highs and new resistance levels. I look forward to seeing your guys' comments down below. Those of you that are true bulls and see value here still, are you looking at this as an opportunity, or are you starting to consider a shaving off on your position or loading up on your position? That's what I really want to know. Investor sentiment, how they're feeling, and also how others are seeing this, and what other catalysts do you think can actually lift this up and attract investors once again back to Sndl. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button to let me know you watch this video. Stay tuned till the end so that you know which ticker symbol to add to your watch list and keep on your radar. Stay tuned. So for everyone that has stayed to this point in the video, yesterday we talked about INTC, Intel Corp, and today I'm going to share another stock that you definitely want to keep on your watch list moving forward. It's in the same sector, but it's actually a little bit more comparable to Nvidia, and it's almost 1/4 of the price. Now, INTC, we talked about it yesterday. I just want to do a small recap. We circled the big circle, how much it's dropped. We did the small circle. This could be the bottom, but we're also seeing it slightly recover. And then we drew that we want to see if this consolidates or pulls down further, because it could pull down further. Right now, it's within the consolidation period and area. Very interesting enough, it's been holding itself up, and there's room here for INTC to work its way back up over time. There's definitely potential, especially in this sector. Now, the one I'm going to share with you guys is IBM. This is the one you want to add to your watch list, and this one's already recovering really fast. I did not think it was going to recover this fast. As I did yesterday's video, I was looking at INTC. I was like, possibility of a type of consolidation to form, and we're already seeing it. And IBM was consolidating pretty fast at these lows. And quickly, as the day started to run, you could just see it running. And as I'm speaking about it, it's working its way up to newer highs. Interesting enough, it's like fighting to keep pushing, and it keeps seeing newer highs every 30 minutes so far. Now, IBM, it's a little bit more pricier, but it hit lows here of 117, and the midway point of all of this is about right here at this point of 115. And then the next point would be probably down here at 111 and then 105. But to kind of break this down into three sections, 117, your first support, your next one's 115, and then down here at 105. So you kind of have those points of reference to see if it continues to pull in that direction in the near future, or if it doesn't even get near them, this is already pulling back up, and it might seem to have been the bottom of this drop. I'm not saying that it can go any lower later in the future, but it seems like this has been the bottom. And if we see consolidation forming, right, for a really short period moving into tomorrow or the next following days, and then continue to work its way up, this could be on its way back up to these highs over an extended period of time, either weeks or months from now. Now, the one thing I do look here at the chart is that a lot of investors that have been in way before this started to run from 105 all the way to here, anywhere around this area, are saying, whoa, the last time we saw this at 117, 118 was back in November 20th, 23rd, leading into the end of the month. So we haven't seen this type of discount for 2 months now. So long-term investors are definitely jumping in and taking advantage of the price. That is becoming very obvious. And a lot of investors were willing to pay these premiums. So at some point, once it gets back up to these numbers, it's going to keep pushing up. So very interesting, in my opinion, based off the chart, how quickly it's reacting. This is definitely one to keep on your watch list and radar. As always, if you like this video and you found it helpful and informative, hit that subscribe button and don't forget to click on the bell. Share it with your friends and community. Don't forget to hit the like button to let me know you watched this video. And thank you guys so much for watching, and let's make some money.